We'll take that in our subsequent webinars. Today, we're looking at the opportunities in real estate in 2021 and beyond. To help us accomplish this, we have two distinguished gentlemen. They have vast knowledge and experience in real estate, and they'll be taking us on a journey on real estate investment. You'll all agree with me that the economy has taken a serious bashing due to the COVID pandemic. GDP negative for the first 3 quarters, but we've heard that Q4 of 2020, there was 0.11% GDP growth. So technically, we're getting out of recession. But inflation has been growing double digit. December, it was about 15.75%. January, 16.45%. What do I think will happen February and beyond? I think it will still grow because food inflation has been a major contributor to the high inflation rate. So with what's happening now with strikes, even though the land borders have been open, we've not really seen the impact. With the herdsmen crisis, I still think that inflation will continue to rise. The question then becomes, how do I invest to hedge inflation and the impact of the COVID pandemic? If you ask me, well, let's look at fixed income, for example. The yields are quite low. Treasury bill rates are low. Stock market is not bullish at this point. We're still, it's not, I wouldn't advise that. Well, if you're looking at mid to long-term horizon, yes. Cryptocurrency, central bank has put paid to that. So I would say investment in real estate. But like with every other investment, it's not, you need to be informed and you have to go into it from a position of knowledge. That's why we brought this webinar and brought the speakers together so that we can try in our own little way to try and impart that knowledge so that when you're investing in real estate, because you need to know the where, the how, there's some basic things that you need to know investing in real estate. And I hope that at the end of this webinar, we'll be able to make more informed decisions. You know, they say knowledge is king. But for me, the effective application of knowledge is king. So we'll take you on this journey and hopefully be able to make more informed decisions. So thank you once again for joining us. There'll be opportunities to ask questions as the presenters make their presentations. There will also be some ground rules. So I will pass you on to Moriola, who will introduce our first speaker and then also let us know the ground rules. Thank you once again for joining in. Initially, when she came up, she said, thank you for joining early. It's not joining early, it's joining on time. Even though it's virtual, we really do appreciate people who come on time, and we hope that that will be transmuted into the physical in future in Nigeria. Thank you once again. Moriola, you have the floor.
Thank you, sir. You're welcome. You're welcome once again, everyone. Thank you for joining in on the maiden edition of our webinar series. If you have any questions in the course of the session, please put them in the chat section and we will take them once it's time for questions. This webinar is being streamed live on our Facebook page, and a replay will be available on our YouTube channel later on. And we would also share the recording with all participants via email. Our first speaker for today is Mr. Hakeem Oguniro. Mr. Oguniro is the founder and CEO of Eximia Realty Company Limited and Home for Me Nigeria Limited. He's also the chairman of the board of directors of Lagos Building Investment Company PLC and a non-executive director of a few other companies. Mr. Oguniro has won a couple of awards in his career, some of which are a former Fulbright visiting scholar at the Yale Law School, Property CEO of the year 2011, Real Estate Unite Person of the year 2013, Award for Rate Innovation UK 2014, to mention a few. Mr. Oguniro recently retired as the Managing Director of UACN Property Development Company PLC. Please join me as I welcome Mr. Oguniro for his presentation.
Good morning. Are you guys hearing me? Morning.
Good morning, sir. Yes, we can hear you.
Yes, we can.
Okay, I'm trying to share my screen from my laptop, even though I'm using my iPad to present. So you guys have to allow me to share my screen. You have to enable multiple participants to share the screen. Just give me, somebody doing that for me, please. Just
yeah, that has been done, sir.
Okay, give me just 1 second now. I have just 20 minutes, so I know I'm already using my time. Let me just start, let me be doing the preliminaries while I'm sorting this out. I'm very pleased to join this seminar this morning, this webinar this morning. At the beginning of the year like this, it's always good to try to look at the outlook for the year. And I'm particularly happy that REFin Homes is talking to a very strong constituency, which is the potential first-time home buyers, which we don't usually remember when we do this thing, you know. So I'm really very happy that I had the opportunity to speak to them this morning. I've divided because the time is really, really very short, I divided the presentation into just 2 parts. The first part really will look at some preliminaries, which is basically all the basic things that we need to know about real estate. And then in the second part, I'll try to look at where we are where we are post-COVID, and what are the challenges, and what are the areas that we need to be able to look out for opportunities. You know, I'm just trying to sort this my laptop out. Just give me 1 second. So I can share. Fortunately, I discovered I couldn't share with my iPad this morning. I don't know what's wrong. So you have to pardon me. You know, some of us were, okay, I think I'm on now. I'm trying to share now. Nothing. Just give me 1 second. You know, some of us we are digital. We're digital. Okay, I think I'm there now. Are you seeing the screen?
Yes, sir.
Okay, good. Brilliant stuff. Okay, so we're looking at real estate opportunities in 2021 for first-time home buyers. And what I've basically tried to do is to start with, I'm sure many of us, we know this quote about this importance of real estate being the basis of all wealth, of wealth globally. Lewis Scott made this to be very popular. And for those of us on Instagram, in the past few days, Reno Omokiri also said something about real estate, which has been trending, you know, in terms of the strength of real estate as the basis of wealth compared to other asset classes. You know, so it's no brainer that real estate is a very critical asset class and the basis of wealth for most people, you know. So what I've done in this presentation, I'll try to look at the basics. Like I said, it's always important to look at the basics, look at definitions. I'll try to briefly, you know, because my time is just too short, look at real estate and other investments. What are the benefits of real estate vis-a-vis other investments? I'll look at what I always call the golden rules. You know, I always like to discuss the golden rules of real estate investing. And then I'll look at the opportunities. And looking at the opportunities, what I've done basically is to look at the impact of COVID. And, but in spite of the COVID, where are the sweet spots? I always say that, you know, in mafia, they say that when blood flows on the streets, it means there is money to be made. So it depends on what you want to see at this particular time, whether you want to see the challenges or you want to see the opportunities. Because in spite of all the challenges that we face, it's clear also there are some spots that we. So I just share a few of those sweet spots, and then take questions. So basically, real estate investing involves purchase, ownership, management, rental, and or sale of estate. It could be land, it could be buildings, it could be related assets, or it could be an interest in land. Because it's not just when you are buying land. You are buying an interest in land also. It qualifies as real estate investing. And I'm talking largely for those who do for profit. One of the golden rules I'm going to be sharing with us is, I always like to stress the fact that we're talking to those who are driven by a return, not those who are driven by emotion. There are 3 ROEs. There are 3 ROEs in real estate. There is the normal ROE, which is the return on equity, but there's also the return on ego, and there is return on emotion. So it depends on. I'm talking of those who are looking at ROE, which is the return on equity. So it could be direct or through direct or joint ventures, and it could also be indirect. It could be that you are making indirect investment in some real estate vehicles. It could be REITs, it could be other real estate related assets. One of the things that a lot of people confuse in the market, I was talking to the MD of a PFA yesterday, is that people always ask, why are pension funds not investing in real estate? But the reality is that the rules, they cannot invest directly, and only invest through specific vehicles, which specific requirements. So those indirect investments are there. In terms of what are the differences, so I've just basically looked at. I'm going to send this presentation later. So between real estate and other usual investment instruments that they normally compare real estate with, stock, bonds, or sovereign bonds. So I look at investment size. Real estate generally involves a large amount of money. If you have 1,000 naira, you can invest in stocks, but it's not the case with real estate unless you are investing in indirect real estate vehicles. So usually real estate involves a lot more money than other asset circles, asset classes. The holding period is always longer. The asset conversion cycle from the time you put the money to the time you get money back is much longer, unlike stocks. You can buy stocks today and sell tomorrow. But if you put your money in real estate, you have to wait for a much longer period. And it's important for somebody who is joining the train, as a first time to understand that even if you want to flip, sometimes it's difficult for you to just come in and go out of the transaction. Complexity is a lot more complex because of documentation, legal requirements, and all the other issues which are also involved in that aspect. Structure. The structures are usually much more individualized. You can, as a real estate person, you can buy directly, but for stocks, you have to buy through organized stock exchanges. The other issue, of course, is performance information. Real estate puts you, makes you entrepreneurial potential, because if you really want to do real estate, you cannot be passive. You have to get your hands dirty if you really want to do it. So just comparing with others, what are the benefits of real estate investing? I've tried to just look at a few. Scope for capital appreciation. When people talk to me that the yield on this particular project is low, but I always try to explain that in real estate you are looking at the yield and capital appreciation, and when you average it out, then you know what return you are getting from that particular transaction. So as a first timer, it's important to understand that when you are calculating your return, you're not just looking at your yield. You also have to look at potential for capital appreciation. Income stream, well, you know, a lot of people argue that you can have bad tenants, but you can also have good tenants. You know, real estate, you know, typically gives you regular, consistent, and predictable cash flow. I mean, this is a new year now. Landlords, they know when their rents are coming in, they know how much is coming in, and they know exactly what needs to be done in that respect. Self-occupation, occupy and lease later. Then I looked at the disadvantages, you know, of real estate investment. I call that why not real estate investment. I already mentioned high initial investment costs, legal issues. There's a lot of legal complications, you know, legal complexities. Let me not use the word complications, you know, involving real estate. Government laws, burden on land, perfection of title, and all those things. Issues with landowners, omonile, you know, land grabbers, you know, which I'm sure many of us come in contact with on a daily basis. You know, issue of maintenance, all the issue around service charge, you know, which is still a major problem in the industry today. And of course, debt. A lot of the time, if you don't match your debt with the gestation period of your investment, is a problem. You know, if you have a mismatch, it can lead to significant problems. I need to leave this now and then look briefly at what I call, you know, because if you're a first timer to real estate, there are some rules that you must have at the back of some principles, some basic principles. Let me not use the word rules. You must have at the back of your mind anytime you are making investment, particularly if you are investing in, if you are making a direct investment in real estate. And the first one, of course, which I mentioned, is location. You have to choose the right location. You know, in real estate, we say location, 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 you know, and I tend to say that the first three factors you have to take into account is location. Location is one, location is two, location is three. Any other thing is a fourth factor, you know. So there's no point, for example, going to build a massive estate in Akute or in some Abule Oja, you know, because once you discount the cost of land, every other thing is the same, you know. And I was advising some people recently, you know, they had to make a choice between doing a project at Ikeja, Alausa, and at Lekki Phase 1. And I told them that it's a no-brainer, you know, because if you finish this project office and some retail, you know, maybe in Alausa you get anywhere between 40 to 50,000 naira per square meter, you know, but easily, you know, on the island you will get above 120,000 naira per square meter, you know, which is twice the rental which you can get in that place, you know. So your location is very critical. You look at the amenities, the facilities that are there schools, who are the people living in the area? I mean, do you have infrastructure? Do you have access? Access is critical. You know, all those basic things, you must take them into account. I already mentioned that you must be driven by a return. And I'm talking of return on equity, you know, return on equity, not return on ego. I've had people say, I want to build 100 stories, you know. The question is that, if you look at the economics of that decision, you know, what does it put on the table for you? Or some people have said that, you know, these are family house, you know, in Surulere, therefore we have to build it up or whatever. The question is that, and that's like return on ego. The question is, what is that's like return on emotion, you know, what is the return on equity they are putting into the project? Compliance is critical. And you have seen a lot of, you've seen what Ministry of Physical Planning has been doing in Lagos State, you know. I always tell people that you will never see me till the land unless I have all my documentation in place, you know. I have to get all my documentation in place, you know, because the cost of re-complying is always too much, it's always too high, and there's also the risk, there's reputational risk. Obtain a perfect title is critical, and is a major issue in this industry, you know. So if I'm a first timer, you know, a lot of people, they spend 20 million to buy a property, but they don't want to spend 1 million to perfect the title. That to me is being naira-wise, it's been naira-wise and kobo foolish, you know. So being kobo-wise and naira foolish rather, you know. So perfect your title. I've already mentioned the issue of approvals and permits. So let me quickly round up by looking at the opportunities, which and the challenges. The first thing I like to stress that we must understand that real estate thrives off the back of macro fundamentals. So at any point in time, it is the strength of the economy that will determine the strength of the real estate sector. So you cannot divorce the real estate sector. When people talk to me about the poor return in real estate, and I will tell them to go to the stock market also and look at what is happening in the stock market. Unfortunately, today, 2017, 2018, early 2019, when investors were able to buy treasury bills at 17, 18, 20%, those days are gone, and I hope they are gone forever. Now all of us are back to reality, so you have to earn whatever return you want to earn today. The other good news is that, well, is a mixed bag, is that Nigeria is out of recession, Q4 2020, which really should drive real estate in a more positive direction, but I read the analysis by one, I can't remember now, who said that Nigeria is out of recession, but Nigerians are not out of recession, because the growth was just 0.1%, which is, for a country that population is growing at between 3 and 5%, we're still in some trouble in that respect. The other point I want to stress is that, if you look at my business commentaries earlier in the year, I've said that year 2021 is year 2020 plus, because the carryovers of 2020 are there, and you still have to deal with the challenges of 2021. But we started 2020 on a very good note because of positive regulation, the Finance Act, the previous year there was the law on pioneer status, all of which have very positive impact on the segment. The collapse of the yield on alternative instruments was also very good for us, very good for the segment, because for the first time now real estate had a fighting chance. If you're able to deliver a project at between 5 to 7% return yield, you had a fighting chance, because return on other instruments were tending more towards negative at some stage. That was the positive note on which we started 2020, because until, of course, Corona struck and all the challenges we're still grappling with them today. So, like I said, where are the sweet spots? I'm trying to go to the next slide. Where are the sweet spots? The screen is not moving again. I don't know what's wrong. Are you guys hearing me? Hello?
Yes, we can hear you, sir.
Yeah, okay, hear you, sir.
Okay, the screen is not moving. Okay,
Yes,
so
Yes, I can hear you.
where are the...
Yeah, I hear you, sir.
Okay, good. So where are the sweet spots? Let me just discuss where I think the sweet spots are, particularly for first-home, and not just for first-home buyers, for all of us. Where should we be looking at in 2021? Of course, for a country like Nigeria, we always start with the residential segment. The reason is very simple. Home ownership penetration in this country is still 12%. So there's still a gap of 75% of people who will own the house, who still want to own their own homes. Housing shortage is still like, well, they say we say between 17 and 20 million. So there's always a major opportunity, for us to look at in terms of where the opportunities are in the residential segment. I tend to always classify residential segment into 4. Luxury segment. That segment is very resilient. If you talk to those who play in the segment, if you speak to El Alan, after number 4 body loan, they have like 3 or 4 other projects, And if every time I speak to the MD, say, you see, and the reason is simple. The people who buy in that segment, they are not first-time home buyers. They probably want to buy a second home or a third home, or they just want to buy, or they are abroad, they want to relocate, you know. But that segment is not, I would not recommend for a first-time home buyer unless you are really, really very heavy in your pocket, you know. The segment of premium and classic is very tough, you know, because pricing, if you want to play in that segment, pricing is a key competitive driver, you know. So the customers there, they are price sensitive. They demand for great value. You must be able to play heavily on pricing. And so if you're able to build efficiently, to deliver at the right price, you know, you can play in that segment, you know. I think there's a very strong market in the comfort category. And that's a category, like I think is between 15 and 50 million. That category, you have a lot of first-time home buyers, you have a lot of young families, you know, the price point is not too high. Once you're able to raise your counterpart fund of 30 to 40%, you can always get financing for the balance, you know. So I think that is one segment in which I believe there is a very significant opportunity at this particular point in time. The other point, of course, is the other segment, of course, is to look at, unfortunately, the whatever is not moving, the screen is not moving. So I look at commercial, and I say commercial is heavily challenged. Grade A is a tough call because of COVID-19. Most people are now working from home. The rate of return is not as office return. I mean, even in my office, we still do 2 days. We do 2 days off, 3 days on. Even on site, we do one site meeting, one physical site meeting, one virtual site meeting. You know, so the reality of the matter is that for quite some time, that is going to have a major negative impact on offices, particularly grade A. Grade B, I see some strong opportunity in that because that is still somewhat resilient. In this presentation, I say hospitality and entertainment, probably not for first timers, because as a first timer, you want to encourage yourself. You want to put your resources in a venture that you are sure that your return will come immediately. Retail is still struggling. There's major opportunity in industrial and logistics. You know, I'm sure you heard recently that Rack Center is increasing their capacity by investing over $100 million. You know, to 6,000 square. So there's a, you know, even with all the technology, you know, in real estate, we always say that the cloud lives on the ground inside our data centers. You know, so the logistics hubs and all the issues around data centers are very, very good areas for investment. In terms of buying, I think lands and shops, lands and shops are good opportunity. I always say that there are two things that Nigerians buy without thinking too much. They buy land and they buy shop. They buy land and say, okay, I will build later. They buy shop and say, okay, someday my wife or my daughter or somebody will need it. So there's always an opportunity for you to flip in that segment. There's opportunity for co-investing, and there's a whole lot of co-investing which is going on in the market. But it has to be a lot more structured and make sure that it is backed with the right agreement. Opportunity to invest in real estate notes. Last year, about 4 companies issued notes. I also know that this year, a number of companies are also going to use issue real estate notes. And you can invest as long as you're sure of the promoters of the business and you do your due diligence. I've mentioned fractional titles. That is also growing, you know, even though there's no law on fractional titles in Nigeria, you know, but we're going to push for reform in that area. That's one area that I'm going to push for reform, because when you have a strong legal framework for fractional titles, then it's easier for people to invest in smaller bits and pieces. Opportunity in co-work and co-ownership. Finally, just for me to round up, I know my time is on. You know, we also must not discount the impact of technology. You know, so there is strong potential for investing in digitized assets. You know, I see, you know, with the rule on crowdfunding, I see a lot of real estate vehicles becoming fractionalized and digitized, and people can invest in tokens. You know, is one area I'm looking at very seriously. I'm sure you guys know well, I don't want to promote my book. I have a book on REITs, Real Estate Investment Trust, which is due for public presentation on 31st of this month. There's a whole chapter which I have looked at REITs and technology. And the whole idea is that what is the impact of blockchain, of AI, of Internet of Things on real estate? And for those who play at this segment of the real estate value chain, we must understand that with technology, you have to be able to be a lot more futuristic in the way you position your assets. You should be able to unitize. That's what it does. But beyond unitization, you have to digitize those units, and position the property in the digital ecosystem. That, I think, is a major opportunity for the future. I'm just going to stop here right now. Thank you, REFin, once again for inviting me. I probably will take a few questions before we go on. Thank you, and God bless.
Thank you, Mr.
Hello,
Alvaro.
Aaron. Okay.
Yeah, thank you, Mr. Alvaro. Thank you for accepting our invitation, and thank you for that wonderful presentation. We have a few questions. One of them you just spoke about, but someone wants to know why REITs are not active. That's real estate investment trusts are not really active in Nigeria. Someone else wants to know how he can fund his first home because he's gone to his mortgage bank. The rates are double digits and the tenor is quite short. What are the alternatives for someone who cannot meet the requirements of getting a mortgage? Thank you, sir.
Okay, thank you very much. Let me start with the last question. My advice, in this market, we just assume that we should buy a home when we want to buy a home. And it doesn't work like that. In other jurisdictions, they've understood that you have to plan towards buying a home. You have to plan towards buying them. And that was why when I started my business, apart from starting my development business, I also started with a real estate cooperative. The idea being to help people to save at least the counterpart portion of the value of the house they want to buy. I always draw example from Kenya. In Kenya, for every 10 homes that is sold in Kenya, 8 are financed by SACCOs. SACCOs are the equivalent of our own cooperatives. The SACCO system is so well developed, and people understand that if you want to buy a house, you have to put some planning and program to it. We still have not understood that. So my advice is that if somebody wants to buy a home, number one, you cannot go and borrow 100%. You cannot take 100% mortgage to buy a home. You'll just die. Interest rate is between 18 and unless you want to take national housing fund with all its own problems, But if you want to take commercial mortgage, interest is between 18 and 25%. It means that in 5 years, you have paid the capital value of your house twice. So my advice is that you plan towards the buying of your home. You start work, you consciously put money aside towards making at least 30% of what it could be 3 years. At least you know that you are a tenant for 3 years. After the 3 years, you can then take that initial that you can then make that move. That's my advice. For first-time home buyers. The projects I do now is targeted more at first-time home buyers. And we've tried to create a platform, to help a lot of people to walk their way towards that. That's the issue. On the issue of REITs, of course, that we floated a REIT in 2012, we listed in 2013, and since then we discovered that there has been no other REITs in the market. Between then and now, there has been about 6 or 7 attempts, but they all were dead on arrival, and that was because the legal framework was very slippery. we had to, in fact, not that we didn't think out of the box. When we broke the box and we created a structure which was outside of the law, and we took that structure to SEC. And we said, the legal regime as it is, cannot support what we want to do. But we have this structure which we believe will work. And SEC took a look at the structure, and it is to the credit of SEC that they didn't say no. They also didn't say yes. SEC has its own objective, which is to protect investors. We had objective, which was to issue an asset class and optimize the return to our customers. We had to meet in the middle to balance both interests. Eventually, we came up with a structure, the DOT structure, which was accepted by SEC and which was later enshrined in SEC rules. So the legal framework was very slippery, but happily, the Finance Act of 2019 has largely solved, it hasn't fully solved the problems, but it has largely solved, because what was the main issue with Nigeria? The main issue was that we had a framework for unit trusts, and we tried to force fit REITs into that framework, and it will not work. They are two separate asset classes. But over the years, we've had a number of rules, and the Finance Act, the fundamental feature of a REIT is what we call the pass-through principle, and the Finance Act recognizes that real estate investment schemes, are based on the pass-through. If you look at Section 7D and Section 9S of the Finance Act, it recognizes the pass-through principle, and it also has quite a number of rules on the tax treatment of REITs, which is I wrote a whole chapter on taxation and REITs, and it was probably the most difficult chapter for me. I had to get it peer reviewed by Wale Abayomi of KPMG before we now came up with a structure. So I think that with the new legal frame, with the new legal regime, it will be a lot more easy. It will be much more easier to float REITs. You also know that last year, of course, the third Sukuk was issued, and some organizations tried to issue what they call Islamic REITs, Islamic bond, Islamic REITs. So I also have a whole section in the book dealing with Sukuk, Islamic bond, Islamic REITs, looking at what has happened in Muslim countries. 3 years ago, when they enacted their legislation, they have a whole section on Islamic REITs. So I believe that with the changing framework, particularly around tax, and other incentives, I think that we should see more REITs in the market. And with the impact of technology, not only are we going to see more REITs, we're also going to see assets which are digitized on that basis and where people can sell tokens. I was looking, if you go online, some guy just launched what is called equity tokens in the US in the past 3 or 4 days, and I've been trying to study the model, and I do think that it's a veritable example that we can also look at for this jurisdiction. Thank you, sir.
Thank you very much, Mr. Oguniro. The REITs were eagerly anticipating the launch of your book. I know you said you're not promoting it, but we'll promote it for you. That should be launched at the end of March. When is your book going to be launched? End of March. Okay, so it's a public presentation. It's not a launch as such. So we're having it on the 31st of March at Whitbaker, and we're going to have a dialogue on innovative financing solutions post-COVID. And we have speakers from all over the world. So we spend like 30-40 minutes to discuss that, and then we'll review the book. A whole lot of people are going to be on site, and we also have a virtual version, just to drive the points, So I know I already spoke to REFin Homes. You guys are my partners in progress, and I know that you're going to be on ground to support us. Yes, definitely. And then, in addition to the question on how to fund the mortgage, for us at REFin Homes, we have a home assurance scheme, which is a 72-month plan Like you rightly said, you need to plan. You can't just wake up and buy a house. So it's a 72-month plan. If you're able to put money aside consistently, by 36 months, you should have your house. And then we'll give you time to pay over 72 months. So there are various vehicles to be able to get to home ownership, but the critical thing there is planning. Thank you, sir, for honoring our invitation. I'm sure there are no further questions, we'll just move on to the next speaker for this morning. Thank you, sir.
Thank you.
Good morning once again, everyone. Thank you very much, Mr. Oguniro. Our next speaker for today is Mr. Damola Akindolire. Mr. Akindolire is the Managing Director of AlphaMed Development Company. He plays a leading role in real estate and infrastructure development. He's specialized in business strategy, business development, an excellent negotiator, and property investment specialist. Please join me as I welcome Mr. Akindolire for his session.
Good morning, everybody. It's really a great privilege and pleasure to be here with you this morning. I want to thank the organizers of this event, REFin Homes, for putting together a series like this that helps us to continue to educate the market and also at least give a steer to how people should organize their portfolios going forward. I would also like to say a big thank you to my big brother in the industry who has done a wonderful presentation. That's why I felt there'll probably be nothing new to say once he's done. So what I will be doing in the course of my presentation, or my discussion rather, would be to draw your attention to some of the salient points that Mr. Oguniro has made earlier on. And the reality is that real estate is a very, very important asset class, like we all know already. For individuals, it naturally would occupy anything from 50% and above when you look at your entire investment universe compared to corporate entities and investment or asset management companies that may have less appetite for real estate investments. And there's a real reason behind this kind of structure because for most of those asset management companies, their strategy is more driven towards liquidity and securitization, while for individuals, our focus is more on preserving and growing wealth. So that way you find it a bit tilted towards this kind of direction. So what I'll be saying basically would just be speaking to areas that I think could qualify as consideration you should look at in the year 2021, because there are many factors that speak to very, very volatile industry. Luckily, we have just recently come out from a very interesting, artificial recession initiated by the COVID situation. So a lot of things are changing places. One of the things that is very important when you look at your investment universe is what is the competing asset class that can offer better returns other than the real estate market in currently available. GT Bank recently started upping their interest rates, and there's a comment that came with that to say the days of cheap loans or cheap interest rates are over. Now, that's one of the reasons why a lot of companies moved into the private placement space, which is being able to put together a structure under some kind of trustee arrangement to allow private capital to access private real estate opportunities, or what I would call, developers' share of profits. So once interest rates begin to go up in the bank, you begin to see that the appetite for increased yield, on the private placement side would become a bit difficult. And for that reason, real estate investment may begin to take a hit because investors' appetite may begin to move towards other asset classes. But that is not to say that there are no opportunities to consider, because real estate plays two key roles. One is that it presents very strong preservation of capital, especially in the high inflation environment like we have here in Nigeria. So if you're a real estate investor, and if you're an investor and you're not preserving a significant portion of your wealth using real estate as an asset class, then it's most likely you are losing value by the day. So I will start with my views on this, and these are my views. They are subject to discussions, which I'm very happy to have right after I list them out. So my number one pick really in that space, if you look at the entire subsector in the real estate asset class, when you look at the residential, commercial, industrial space, the residential space will continue to remain a bit resilient in terms of being able to offer the kind of return that I would expect. But even in the residential space, there are subsectors within that space that are quite attractive. Like Mr. Oginiro has said, land and shop. Land banking is something that you should consider as a potential opportunity in 2021. And when I say land banking can come in various manners. It could come in form of you buying the land to hold. It could also come in form of you investing in a real estate investment club or collective investment scheme that plans to hold land assets as an asset class. Now, that is where you can really earn and preserve a lot of value, And when I talk about land banking, there also has to be a strategy behind it. Land banking goes beyond just holding any kind of assets. Preferably, it would require you holding assets in greenfield areas with strong potential for capital appreciation than more brownfield areas that have already been developed and already are reaching their peak in terms of return. And when you look at that, that also would lead to the next point in order, which is when you want to consider land for investment, you need to ask yourself some salient questions, which is what is government's plan, in terms of overall development strategy for the states. For example, it's in the news that the Lagos Blue Line would come on stream sometime from Agbara to Marina in 2022. For that reason, it's only expected that if you are able to get from Agbara to Marina in 40 minutes, then that is a potential opportunity that you should be looking at in terms of investment opportunities. The second thing you would also want to note is the government's plan to expand the Lagos-Ekpe Expressway, which they flagged off the first half of that particular transaction. That also speaks to capital appreciation and the effects of what that road would impact on within that axis and the impact of the free trade zone and so on and so forth. So it's important that if you are looking at investment opportunities in 2021, you may want to consider what government plans are and areas where you think there will be some significant impact on infrastructure and investments. These are areas that you have to look at the risk and rewards and decide how you are able to participate. One very important point that was also made by Mr. Oginiro was the issue of cooperatives. It's a general notion, the National Building Society in the UK, and he had mentioned the reference in Kenya. That's typically the easiest and the lowest entry barrier to owning or accessing real estate opportunities. So unfortunately in our space, there are not very many of them that we consider to be building societies. I do know of a mortgage bank that actually started up as a building society, whereby parties contribute to a pool of funds, and as soon as you identify a real estate opportunity, you're able to access a loan at a reduced amount to purchase a home or real estate asset of your choice. So these are things that are beginning to come back to the market. So if you're not a member of a building society or you're not a member of an investment society, it's something that you may want to consider, because some of the societies are able to offer low interest funds because of the nature of their contribution to access real estate opportunities. This is something that the pension funds would normally would have supported in one way or the other, but like in Nigeria, things don't move as fast as we want them to move. We do know that there are policies around seeing how people can access up to 25% of their RSAs to potentially access real estate opportunities. If those kind of policies can come through, because there's no point saving money for people if at the end of the day, inflation may have wiped out the benefits that may accrue from such savings. So if those kind of policies can come through and policymakers can see this through, it will definitely stimulate the real estate space, particularly the residential space. So that's another consideration that you may want to take, as part of your strategy to move 2021 forward in terms of your real estate investments. There are definitely many opportunities, like Mr. Ogunro mentioned as well, private placement, corporate investment, but I'll speak to something that he mentioned towards the end of his presentation, which is what digitization and blockchain will be doing to the real estate space over a period of time. This is something that has always fascinated me, and like I said, there's a clear distinction between blockchain and cryptocurrencies, even though they run basically on crypto networks, which is identity and security, but they are offering two different solutions in that space. What the blockchain technology will do would transform the liquidity that comes into the real estate industry, particularly from a securitization point of view and also from a liquidity point of view, whereby investments or asset classes that are already yielding can issue what we call, security token assets, which is called STOs, or companies are about to start grandeur or landmark projects can issue what we call initial coin offerings. And this is something I'm very much aware of. There's one of the premium developers that owns a very significant land bank in the country that will likely be issuing something called the AKN coin soon, which would definitely allow for people to participate in high value assets and at the same time being able to hedge their risk against the currency, given the nature of the Naira. So this is something that will definitely be an opportunity or an area that you should strongly consider in 2021. People being able to offer very well-secured, well-structured, and very attractive yielding tokens for the benefits of real estate investors, as the case may be. And the way these things work is in any economy that must derive the full benefits of digital bonds, digital securities, or digital assets must have an outlet to which those assets can, have the benefit of price discovery, asset discovery, and also asset yield. And that can only happen when exchanges are able to offer sub-markets where some of these assets can be listed, can be traded, to allow for easy price discovery and asset discovery. When you don't have those kind of assets or those kind of exchange offerings, the market will generally struggle to have a convenient outlet to trade those tokens. Why the valuers can put their opinion out there, but supply and demand, like it is in the equity markets, can drive the value of tokens issued by real estate companies. So this is something to watch out for in 2021. I'm very much aware there's one of the exchanges that would likely be launching a digital asset exchange sometime before the end of Q2. And that definitely would open the horizon for some of the things Mr. Ogunro had mentioned and simply transform that space. We can imagine what it would look like if we took 10 hectares of land somewhere along Bejuleki, put a valuer, get a financial analyst to give an opinion, and then put that same value on an exchange where it can easily be traded and also bought and sold, and the settlements can take place instantly. So this is something that would disrupt the markets, and it's something that we should definitely look forward to. My last point will speak to the issue of policy and taxes. When we look at the legal framework that Nigeria has, the reality is that it's not as robust as we want it to be, but it's something that I believe we can still work with. The finance bill, like Mr. Ogunro had mentioned, has also identified some of the inherent issues where you have the issue of double taxation from CIT to withholding tax, as the case may be, as a result of pass-through elements that come with real estate investments in Nigeria. So all of these issues have now been clearly defined under that act, and then the element of double taxation no longer exists. So with the issue of policy and tokenization, which is really where my point is coming to, is how policymakers would identify or see tokens. Either would they see tokens as an asset class, or would they see tokens as another form of digital currency?
You're very aggressive. I like. We seem to have lost reception from Mr. Dolire. We'll find out what's happening and get back shortly.
He has to unmute, yeah.
Yeah, sorry about that. I'm somewhere a bit far up in the north, so I feel the issue of the internet here can be a challenge. So I think by and large, I don't know where I left off, but my last comment was around the issue of policy and how they would align with the progress of digitized assets that will be coming through, whether it will be identified as a security or it could be traded as a currency. Those are the issues that I think I would allow for us to discuss as we go by. So thank you very much for giving me your time. I'd like to thank everybody for the opportunity, and I'm open to questions in areas where I may not have spoken clearly to. Thank you very much.
Thank you, Mr. Akindolire. Wonderful presentation. Even though we didn't see your face for the better half of your presentation, but now we can see you. Thank you very much.
Sorry about that.
No problem at all. One of the things you mentioned was land banking. Interestingly, we have a product called Land Flip that takes advantage of capital appreciation in terms of you buying land and then holding it for a 2 to 3 year cycle. So yeah, I really was appreciative of you talking about land banking. Those technology-based stuff you spoke about, we're still trying to grapple with so many things technology. I believe that ultimately we will get there. We're still babies when it comes to technology. But I think that's the future also. Cryptocurrency, cryptocurrency rides on blockchain technology, and blockchain technology is the future. So real estate, we have to get to a point where we'll be doing things using blockchain technology. So thank you for your presentation. This webinar session will be made available on our various platforms. Questions, please, I hope you would oblige us, reach out to you, Mr. Akindolire and Mr. Agunero, for questions after this webinar, because the questions are coming in, they're quite a large number of questions.
Absolutely, absolutely.
We have limited time. So I would like to appreciate both of you for taking time out to be part of this webinar series. Like I said earlier on, is to focus on real estate opportunities in 2021. Subsequent webinars will be talking about our products, and we'll also invite you when there are topical issues that we need to discuss to share your wealth of knowledge and experience. So I also thank everyone who has logged in, taking your time out, and I hope that we've been able to at least impart some knowledge and information to enable you make informed decisions. But our social media handles will be made available. If there are further questions or queries, please feel free to reach out to us. Thank you very much, and God bless everyone.
Thank you. Bye.
Thank you very much. Bye. Apologies again for the bad network.
Bye.